Welcome everyone to Admiral Markets. My name is Chris, and today we're going to take a look at the financial markets, Forex, commodities, and stock indices using technical analysis as usual. First of all, though, be aware that this webinar and later on video is shown to a global audience, may not be suitable for everyone. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more information on that. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, thank you so much for your attention on that. Today we're going to take a look at the Keltner band. That will be the number one tool we'll be using. But in general, though, what I like to do is, first of all, define the trend of momentum, try to decide which direction, if at all, I want to trade, and then second of all, which direction. Point two is to look for an opportunity within that direction. Either it could be a pullback, like to a fib, or a pattern, for instance. Thirdly, are there basically any filters stopping the trade from materializing? Fourthly, is there a good reward to risk at the decision zone? And what kind of trigger am I looking for before I'm entering that setup? All right, thank you so much for your attention on that. So regarding the calendar, we got basically tomorrow FOMC statement, and that of course will impact the dollar. So that's something that is coming up tomorrow. That's always a big one. Regarding today, we have inflation rates. That's going to be interesting to see how the inflation is behaving in the US. In the European morning, we don't seem to have a lot of news events, as you can see. As far as I can see, not that many, but later on today, we do always keep an eye on the calendar before trading. All right, so the inflation rate seems to be the most important one at the moment, marked as red, as you can see here, indicating a higher impact. All right, let's, with no longer ado, head over to the charts. All right, so maybe some of you watched my recap video yesterday. If you didn't, you can find it basically every Monday morning around 9, 10, 11 a.m. Central European time. You can do that just by going to the admiralmarkets.com website, and you just have to go to technical analysis and then click on the article, and then you will be able to see the video. You can see that it has just published yesterday afternoon, his pound yen, basically. And before that, you see here the weekly Forex overview. That's always the title. It starts with the weekly Forex overview, and then just click on the article and you can see that. Now, for those of you that did watch it yesterday, basically I was indicating that the euro dollar is bullish, pound dollar is bearish, and the yen is in the breakout spot. So basically whatever the developments that I mentioned yesterday are indeed happening. The euro dollar is pushing up, the pound dollar did push down, and not as far as I was thinking it would, but it's still in a bearish channel. And the dollar yen is breaking, and it's breaking lower. If you didn't check your charts yet, it actually broke just a few hours ago. So if you're awake, if you're trading the Asian session, maybe you're in that trade. All the yens are breaking as we speak, in fact, and are showing bearish breakouts to the downside. So that is basically what's happening with the majors right now. And you see that the Aussie, the Kiwi are following the euro dollar to the upside. Even the pound is moving up, but as I said, the channel is bearish. So basically, the euro pound is moving up, as we discussed, or also in the last few weeks, that it is looking like a consolidation, ready to break to the upside. And the break happened, and it's pushing, and it's, I think, above the top even. So yeah, basically, that's the quick summary. And we got some crosses left as well we can look at, and some stocks, stock indices, and commodities we can take a look at too. So are there any trades at this point? Well, maybe some of you are. If you were looking at their heads up yesterday, maybe you're already from a trade down in here. Because that's where I was saying, or if you looked at my wave analysis, Perhaps then you would have also noticed yesterday that I marked it as a, hang on, ABC. I'll show you. This is not, wave analysis webinar, but I'll just show you what I was, one second, what I wanted to explain. Seems to be a bit slow. There, there we go. That was marked yesterday as A, B, C, and you can see indeed that the B stopped at the fib that we had yesterday, the 78.6 fib, didn't break below that and use that as a support, and is now breaking above this resistance and heading for wave C. Or, well, I'm not sure if 100% if it's just wave C, but at the moment it does look like a C. In any case, the wave count was bullish yesterday and today. As you can see, it's really picking up speed. So it's difficult to trade now. Maybe you traded it earlier today, a few hours ago, when it broke basically this trend line like this, for instance, here. Or you traded it yesterday when I was talking about in the video about the ABC, or in the wave analysis at least, and in the video I was talking about a pullback here. Then you're doing well. Then the trade is up substantially at this moment, and you want to look for targets. If you're not in that trade, the breakout has happened, and I don't see any trade right now at this point. That's just a fact of life. It's better to wait and not chase a trade and not jump in right now, because as you can see on a 5-minute chart, the push has been quite dramatic. 70 pips is quite a substantial move on a low time frame, and it's better to wait for a retracement. It could be a bull flag, for instance, like this. If the price starts to move lower like that, that would be perfect for one more push up, and it would be tradable on a lower time frame like this for a follow through. All right, I say lower time frame because the target is, depending on how you look at it, could be not too far away. If we put a fib from here to here, for instance, the target could be 113.20. So, this is not a lot of space on a higher time frame. 70 pips is more intraday potential than a huge, large swing trade, right? Just looking at the number of pips. So there is still plenty of space to move up. I would say today's candle is already quite substantial, but it could certainly become bigger. Today already is 70 pips, but it could turn out to be a 140 pip daily candle. There's still space for upside. So not tradable right now. It was tradable yesterday, as I said, just to recap. But if it does make a retracement on lower time frames like this, or either it is an ABC zigzag or it is a bull flag, those could be ways of trading, or basically ways to wait for a correction and then try to see and if you can catch the continuation. One way is always good is to add the awesome oscillator from Bill Williams, and to wait for this to go back to the zero line. That means the retracement has finished, and when the oscillator is back to the zero line, there's a good chance that price will sooner or later, relatively soon, turn around and start to make a new upside. So that would be a good moment to look or hunt for a continuation. Now, putting on our alternative thinking caps, could this be upside, and could it finish somewhere in here? In theory, it could. Of course, everything is, you got to be, in theory, everything is possible. You got to be flexible with your analysis. I think one of the few problems traders bump into, there's kind of a couple of things that, depending on our characteristics of trading, there could be various things. Some have this, some have that, some don't have problems with other things. We all have our own personal mix, but across the board, I think most of us share a common thing, is that when we make an analysis, it's difficult for us to adjust it because we kind of get emotionally attached to it, and it's difficult to be flexible. In a way, the best approach is to be alert, focused, but relaxed at the same time, and open to new information and incorporating that into our analysis, and don't basically get over fixed or over attached to a past view that we don't want to kind of get rid of, and we're waiting for the market to confirm it. The longer it takes for the market to confirm it, the more we want it to happen. We get into kind of a hope mode. So it's the best balance is always the one where we find the equilibrium between not, of course, switching analysis every 2 seconds, but one where we try to use the market information as a roadmap, but are honest and flexible enough to change it when it's needed in a way. So we want to have kind of a flexible alertness in a way. All right, so that's why I say, like, at this moment, I don't think that this is the turning spot. 112.50 is a quarter level and is a resistance level, and could therefore cause a bit of pullback. That could easily also be the reason why the 5-minute chart stops here, right? 112.50 after a run up like this could easily be a spot where price just takes a breather and makes a correction. That would be logical. So in no way would it make sense to take a long here. In my opinion, it would not make sense to take a short. A, because there's a lot of momentum to the upside and we just had a breakout. B, there is, in my opinion, besides 112.50, not a lot of confluence here as a resistance. And C, I would, if anything, if I were to take a reversal trade, I would need to see at minimum some kind of candlestick confirmation, probably some 4-hour exhaustion candle. I would probably need to see a huge pin bar here before I would consider reversal trades. Now, if it's a huge pin bar, then you can see, looking at the Keltner here, that we tried to poke through it but didn't succeed. And it would be probably a false breakout if you look at this trend line. It would be a false breakout if we get a pin bar that is looking like this. All right, just picture that the pin bar basically relative to the trend line and the Keltner. Well, that looks like a pretty decent reversal signal. If we get that, fine. If we get this candle, that actually does look like a great breakout with a clear candle above the trend line poking through the Keltner. And when it pokes through the Keltner like this, then you have a pretty good chance of a follow through after that. All right. Now, as I said, you want to be flexible. Here too, we had a pretty good candle with the candle close very near the low, poking through the Keltner. We did get the follow through, but look at what the next candle was, a pin bar. So we didn't get much more after that, which is what the pin bar was, of course, telling us. So the thing is, if you see this candle and you justly say that looks like a continuation, and you take the trade right there with the stop loss above it, that made a lot of sense. That is a good continuation or breakout candle, and there's a lot of validity in that. But if you then decide to say, okay, I'm ignoring this candle, and you still kind of over-attach importance to this one, then you're kind of ignoring reality, because that obviously is a strong counter trend or a reversal signal, pin bar, and could easily cause a larger correction or reversal. In this case, reversal. This was the correction, but it actually turned into a reversal. All right, so with this information in mind, we need to either move the stop loss or just exit right there. So although this could be a great candle, the next one could also be a pin bar, and then same story as this. Then in that case, I'm trade managing it and being realistic about what's going on. So yes, this could be a great breakout candle, but doesn't mean I'm staying in that trade forever, right? I keep following the market and see if it makes sense to stay in that trade. If we do continue with good, relatively decent candles here, then I will be looking at the targets. And the target for me would be 113.20 and 114.20. 114. All right, so that would be the upside level to think about. All right, now regarding the Keltner, first of all, the Keltner is great because it basically has two purposes. We can use it for breakouts and back to the reversal or mean reversal trades. So they're basically good for reversals and for trending trades. So they're basically two purposes in one in this tool. So let me give you a few examples here on the $0 hourly chart. You can see, for instance, here when we had a good candle close above it, what I like to look at is candle closes above the Keltner or below the Keltner. All right, and I'm looking for continuations after that. So you can see once we get that, you get a good continuation. Here, of course, as well, you get a good candle, and you do get a continuation, but then more market information is available, and we see that there's not enough steam to push through. Now, these candles, right? This candle still looks decent, but you see some wicks in here. That's already a warning sign that there's probably not much steam, in it to push a lot lower. All right. So that is actually when you see candles struggling at the top or bottom. In fact, that could be an indication of a mean reversal setup. All right. This was a very strong candle too, although it took a lot of time. It never broke this bottom, and we started to push up. Here too, you see the candles pushing up above the Keltner and above the trend line as well. So let's see if we can find more examples. Here you can see very good 4-hour candle. That's a good continuation signal. Here too, took some time in the second case. Even this one, those are all good continuation signals. Reversal to mean signals, basically when you see wicks or candle closes that are not too near the higher low, that shows weakness. So yeah, a wick like that, of course, definitely weakness at the Keltner, Admiral Keltner, and indeed we get a reversal to the mean, basically, and even beyond that, right? You get a sturdy push. Even candles like this, this candle is a pretty decent one, but didn't close below it, and these do have some decent wicks. So that could be an indication of some struggle to continue lower as well. Here too, wick at the Keltner. Good breakout candle there. And some indecision here. All right, so yeah, definitely just in general, using candlestick patterns and candles in general, just looking at the closes basically, of the candle in relationship to the Keltner band gives us a good idea about mean reversal or breakout. Right. So there are probably other ways of looking at it. I think that, for instance, if you would use the middle line as an indication of the trend, I think that would probably do a decent job. If you look at the angle of the middle line, right, that could be a decent kind of measurement for what is the trend actually on this 4-hour chart. That could be a good, I would think it looks good. But that would require some more research. If you like to do that, I would like to hear from you. I mean, just as a general observation, it looks also interesting. I'm sure there are other ways as well that I didn't mention, but this is what I like to use bands for. Bands in general are always interesting as support and resistance. Bollinger Bands, as Mario mentioned, indeed. I use the standard settings, by the way, for the Keltner here. So, and I see another comment here. Asimis took the dollar yen trade and got out as resistance 100 arrived. Okay, cool. Great job on that trade. Did anyone else take any trades so far this week? Always like to hear from you about that. So how do you get this Admiral Keltner? Well, first of all, you can get it for free. That's important. although a lot of indicators are nowadays. Let's see. I want to show you where you can get it right here. You can easily get it by going to admiralmarkets.com. You can click on platforms, then on the Supreme Edition, MT4 Supreme Edition. All right, and then you can download it now. If you're already trading with Admiral Markets, you will have always access. And if you want to test it, you can use a demo to test the Premium Edition. I think it's for a month. You can just try it out. And once you have it installed, the Supreme Edition, you just want to open this yellow folder. You want to go down to the A. You want to click on Admiral Keltner. You want to basically move it on to the chart like that. Okay, by left clicking on it, holding it, and letting go in the chart, and it will arrive. It will ask you for the settings, and then it will be on the chart. So that's pretty simple. There are other MetaTrader 4 Supreme Edition indicators as well, ranging from candle countdowns to gravity to mini charts, order history, pivots, Renkos. There are a lot of things that you can see here, plus some extra correlations, sentiment traders. I'll leave it up to you to discover that, but there's alarm managers, but there's a lot of cool stuff for you to check out. So one of those, anyhow, is the Keltner. That's what I want to talk about today. So now that we have that, in mind, that's why I was saying this could be an interesting candle to look at. All right, because it could be a break or bounce spot, because you can clearly see the push through Keltner. So now you might understand why I was referring to this as an important candle with this context added. And at this moment, it certainly was a great breakout. Anyone who took the trade here, would want to maybe lock in some profit at that 112.50, depending on how you took the trade. I mean, if you took the trade down in here, you might want to think about some profit. Why not? And then take some profit, split the trade, take some profit at 113.20, as I said, or 114. Depends on your risk tolerance. All right, but some profit here, as I said already earlier, might make some sense, because 112.50 is going to be a likely bouncing spot on a 5-minute chart. We're probably going to start a retracement and some kind of correction before a most likely upside continuation. But I say most likely because it does depend on this 4-hour chart candle, and we can see how much time is left in this candle by using our candle countdown quickly. And I somehow do not see it here. I don't know why it worked. When I don't have a webinar, it works, but I don't know why. Let's see. I know why. The color. Okay. Well, anyhow, I think it should be 2 hours, less than 2 hours left in this candle. All right, so that's the euro dollar. Let's move on. I don't want to hold ourselves too long on this. Let's take a look at the dollar yen first. I think that the breakout here is the same on the daily chart. We're also approaching the Keltner, and you can see here we had a good close below it, with the close near the low of that candle too. So we got some retracement ultimately of that candle, but then a follow through. Now we're making that same kind of decision here at the Keltner yet again. And here you can see failures of the Keltner and indeed a bigger reversal or correction. So this candle, this daily candle at this moment is important. If you didn't take the trade earlier, somehow in trading, for instance, this breakout here, like that, or perhaps even earlier, taking this breakout like this, right? Then now I would not recommend it, because I think it's in a bouncing spot just like the euro dollar, and I would expect a bit of correction before it most likely will continue. All right, and at the end of the day, I would expect at this moment a bearish candle to pop on the chart like this. If with the close near the low, it looks like a good breakout candle. It doesn't have to continue immediately tomorrow. There could be some retracement, but there looks like a good chance of follow through. As long as the bullish candle stays small, then a retracement is likely. A continuation is likely to the downside. So ultimately now I think it looks more like a bouncing potential follow through. At the end of the day, I would expect a bearish candle, again a correction perhaps, and follow through. If today does not close bearish and there's some wick here, that could be an indication of struggle. If there is a pin bar, a bullish pin bar, that would probably be indication of a reversal, in fact. So a lot is riding on this daily candle. This trend line has broken. Now it depends how basically can the bears keep control. Will they keep control? If anyone took this breakout trade, great. But we'll have to see how this behaves itself right now. We're approaching, or we already reached 100, almost 100. So will the correction show momentum? If it corrects like this, with momentum, and then shows a bull flag, then the daily candle will probably look like this, with maybe a slightly bearish candle, but a big wick at the bottom, and there's actually a good chance to follow through to the upside. If, however, price starts to do this, that looks like a bear flag, and there's a good chance to follow through today and tomorrow, or later this week. Regarding the Keltner, you definitely had good candles here, good breakout candles here, and you got some follow through, but ultimately this pin bar here, again at the Keltner, showing the start actually of this struggle for upside, and then ultimately the start of the downside. All right, but you can see this candle, strong breakout candle going through the Keltner, and indeed continuation after that. Here too, good candle, okay candle, but there is a pin bar right after that, indicating some warning that there could be a bit of correction first. All right, this is a 5-minute chart. Small mini double bottom here, and some bullish candles at this moment. I don't think I would be that interested in trading it to the upside, but a very daredevil risk seeker could have maybe taken it here at the weakness. 1, 2, 3, 4, 5, 6 candles. Sometimes I take reversal trades when price doesn't show continuation here. 5 to 6 candles, not breaking the bottom. But I only do that if I have substantial, extra confluence, because just that alone is not enough. Because often enough the trend still continues. But if you have some extra support, like the 100 level could have been a reason why this hook back is a bounce rather than a trend continuation. So those could have been reasons for potential reversal trade, as it shows weakness in here, for instance. You see not only the 100 level, you see 5 to 6 candles, you see previous bottom, and you see bullish candles here not poking through this Keltner. Those, for instance, could even be used on a lower time frame. But at this moment, it's not interesting. All right, pound USD. All right, small candle, that does not say a lot, but ultimately looks, if anything, does look bearish, obviously. Does look to be a bit slowing down the downside. 4-hour candle still looks good, and from a 4-hour perspective, still looks strong for bearishness. In fact, That's was my main motto yesterday and today. Well, still the same. Um, as this went up, it definitely could be a retracement for more downside. In fact, that was just about to tell you, but it's already happening. In fact, so now it's a bit late, but that was my plan before this webinar. But it seems to already have taken an effect, unfortunately. Sorry, a bit slow on that. I didn't expect the pound to turn that fast. Um, but anyhow, pound dollar early, it's nothing's lost that much. I think that there could still be plenty of downside left for today. Yesterday I was talking about, let's see, trying to figure out which fib I had on yesterday. I think it was, let's see, yesterday I hit the 272 target. Ah, that was this one, I think. Yeah, yes. Yes, it was this fib. 61.8 fib hit here, as you can see. And yesterday's correction, I was saying either a breakout yesterday or a deeper pullback and for the downside. It was a breakout, in fact, right here. And but the downside has been quite mild so far, waiting for at least a bit of a bigger push. So I think that still, despite this was a good pullback, there could still be a good breakout trade left on this pound USD. All right, now it looks like a bouncing spot indeed. So a bit of a bounce, but later on, either a turn here or the breakout. I still think remain very good trades. Let's take a look at the 4-hour. Target 128.20 for the moment, 25. It should happen today. If it doesn't happen at the end of London, then I would not count on it anymore. So this breakout, I think, still a very good option for today. Otherwise, the other yen pairs are basically the same breakout to the downside on the pound yen, especially the pound yen, because it's moving more than the euro yen, which is still at support in a way. It is trying to break just like the dollar yen. Right? So it could have the same implication basically. How does this daily candle look like as it's breaking the trend line, as it's basically testing the lower Keltner? The pound yen is totally different because it actually has already pushed through the Keltner. Here, closed clearly, and indeed the follow through. So it is in the momentum and it could last for a while. There is a bottom here to reckon with, but if it breaks that, it could keep falling and falling, and it could be an impulsive breakout to the downside. Now, at this moment, I wouldn't want to trade it with the bottom so close, but if it retraces or breaks the bottom and then retraces, there's nothing wrong with keeping an eye on it. Every time this goes back, here, these were good pullbacks as well. But even shallower pullbacks down to the halfway mark, as you can see. So those could be good mini swing trades there. But for the moment, I would not want to trade it right here. If it makes another pullback, either if it makes a zigzag or if it makes some bear flag, that would be perfect. Aussie Kiwi are moving with the euro dollar at this moment. I'm not a big fan of the Aussie though at this point. It is basically kind of making a rising wedge pattern like this. And I wouldn't want to trade it either way. Kiwi looks like it's really struggling with resistance. It could break above it, but I don't know if I would. I'm not a big fan of trading it right here, in fact. So here too, I'd rather wait. This was a pretty big wick. The reversal didn't go anywhere really, or retracement just goes sideways. If it does that, you want to get out of any reversal trade. And no, I don't see anything very interesting at this point. Let me check the lower time frames maybe. 4-hour chart is approaching a key bounce or break spot. And there seem to be a ton of head and shoulders, but still prices are moving up. So no, Kiwi and Aussie, I don't see any trade setups at this point. So let's move on. Regarding the pound, I got one question. I'm expecting a break to the downside, by the way. It looks bearish to me. Good channel to the downside. And we could also draw the channel like this, by the way. There are two channels. And yeah, this looks like a good follow through to the downside. I wouldn't think about any upside unless price breaks above 130.50. All right, anything below 130.50 I think is still bearish territory. Even if it breaks this trend line, of course, the second one I might get a bit more into a cautious mode, but definitely below this channel, the second channel here, it's bearish. This is maybe bearish with caution, this zone right here, the blue zone. And above 130.50, then it's starting to look different and starting to become an uptrend. All right, Euro Pound has been hammering away, continuous breaks through this Keltner and is just riding along. And this is when you get good momentum. If you really have strong momentum, it will ride along the upper or the lower part of the Keltner, even breaking above it regularly, staying above it regularly. And that's showing a lot of momentum. And so anyone who took that trade, we were talking about the break of this consolidation. Is doing very well now. Making a higher high, and trade is doing very, very good. All right, so is there a way to scale in? It's definitely in a big momentum at this moment. A good 1 hour candle. Let's see if there's any space left. I don't know where the target is at the moment. Let's put a fib from here to here. And let's put a fib from here to here. $88.25. So there is some space left. So pretty good 1 hour candle right there. So that could be pretty good. We can put a fib on the hourly candle, for instance. It could be even tradable right now. All right, let's see, 4 hour candle. Could be maybe even best to wait for this 4 hour candle to finish and wait for a 38.2 fib with a stop loss below this bottom here. All right, in that case, 35 pips, stop loss, and a target of We'll aim for 79.70 to be on the safe side. Sorry, 87.96 or so, 94, about 90 pips. 80.78. So what 87.75 would be safer. 87.75. That's still, so 87.70. That's still 64 pips. So that's still a good 2-1. So depending on your risk tolerance, safer Ron is saying resistance at 87.80. So always quarter levels are somewhat risky. Indeed, 87.75. Going below 87.75, like 87.70, is about 64 pips. If price goes back, if it closes like this and pulls back to the 38.25. Stop loss below these bottoms here would give a 2-1 trade. All right, so let's see if this 4-hour candle can hold. That does look good as a continuation, but the euro pound has been pushing up recently a lot. It struggled at start. It was a slow, very slow start, but ultimately did make the turnaround here. The euro odd is looking like either it's a false break or just a incorrect, or not an incorrect, but a late bounce, trying to poke through it, but ultimately definitely didn't do that, and it seems to be bouncing again. And it looks bullish at the moment. Momentum correction. Looks like a smaller consolidation zone, and a break above that. Let's see. Well, basically either a break above it or a deeper correction. If it were to correct down to the 50, yesterday was already a 38.2 bounce. If it corrects down to the 50, that could be a reversal trade and a bounce off the support. Or if it breaks above the resistance, in that case, it could be a breakout trade. If it is a 50 bounce, I would still use stop loss below the candle low. If it's a breakout, then I would probably rather use a candle low below these bottoms. 50-minute chart, I think, could be the best. Looking for basically a break, pull back, and continue. Pound out is very bearish. Look at this daily, pushing below the Keltner, and it stays below that, and it could stay below that for a while. 4-hour chart is showing no signal of any slowdown. 1-hour chart, you see plenty of retracements here, and a recently breakout candle. So it looks like it's well set for follow through. Now, eventually, there is perhaps divergence that we want to be careful of. We got a lot of lower lows here. Could there be some divergence? I certainly think so. So that's something that is a bit worrying. Some 4-hour chart divergence too. So you get to a point that pullbacks are good within the trend, but eventually there could be a bigger correction. For the moment, though, it doesn't look like that, not on the daily chart at least. But on a 4-hour and 1-hour chart, it does look like it could make a bit of correction, but it's always difficult to pinpoint exactly where the correction will take place. From a daily perspective, no worries. On a 4-hour, 1-hour though, I would rather probably wait for some correction. Probably move up to deeper fibs like this. Could be interesting. But if this does close with a wick, then there could be a bigger correction, obviously, on a 4-hour chart. If this has a wick at the end of this 4-hour candle, then I would move the fib, not using this candle, but using this swing high probably. Let me take a look at the hourly. Let me put the fib on this downside. Maybe even put a fib from here to here, in fact. So if this has a wick, there could easily be retracement to the 50, 61.8, 38, any of these fibs here. And that could be interesting continuation for downside. All right. Let's see. Let's take a look at some other exotics. We were taking a look at the IDN, and it basically has not gone that far. We were analyzing it somewhere here, and saying break of the 61.8 target could lead to a bigger correction. It did. So let me take that away and move it a bit lower like this. You can see 38.2 fib, and it's making a new type of triangle, in fact. So let's see which side it breaks to. Pound Swiss is moving lower too. Let's take a look at some of the other charts, like let's see, oil maybe. Oh. All right, there we go. Oil is breaking to the upside after this 50 fib bounce, like this. From this upside, good momentum to the upside. And I think that it looks like a good breakout. Looks like today will be another bullish day. We got a really pretty good series here. So we'll have to see how price responds when it gets up to 46.50 here. Is this going to be a breakout for further, or is there going to be a bit of a correction first before maybe we find support again? I think that's the main question. So there's not a ton of space, but there's still some space left for a breakout to the upside. Gold still looks like in a triangle. And those support and resistance trend lines are still valid. So probably need to break above resistance before we can see the uptrend continue. Sorry about that. Let me just quickly reboot. All right, there we go. All right, daily chart. So yeah, good momentum. Price is basically making a bit of a triangle here. Somehow my gold chart is having some problems. I don't know why, but hang on. All right, there we go. All right, in any case, good momentum. We had a break already a while ago like this. So this does look like pretty good upside. Now, at this moment, there are two scenarios, of course, that are interesting. One is a continuation. Second would be a correction down to this fib. We had a breakout, but it doesn't mean it has to break and break and break forever. It could make a pullback before making another leg up. So is this going to be the start of that? We're 1, 2, 3, 4, 5, fifth candle. So if this week is bearish or a doji, I think actually that could be the start of a correction down to any of these three fibs, most likely, or any of these fibs besides the 23.6. And if it does end up bullish, then I would like to see next week if it could finally break this top. If it does, it is looking like a continuation for upside. And I would change the fib and put the fib from, let's see. All right, from here to here. And the targets would be up in here, minus 272, minus 61.8. And in that case, we are probably getting a break of this triangle to the upside. So if it breaks this week, that would make sense. Then there could be a good continuation. If it fails to do that, then there could be a bigger correction. So yet again, an interesting decision this week. So quite a couple of interesting decisions today, this week, on multiple pairs as we've already discussed. Silver is the same. And S&P remains bullish. All right. So that was a quick look at gold, silver, oil, and some stock indices. FTSE is approaching the top, but the Nasdaq, S&P have broken and are continuing with their push up. I think that if we put a fib on the weekly, it will probably be best to put it from here to here. And you can see some pretty good space to the left. All right, so back to our currency pairs and a quick recap. Any questions by any chance? So let me know if you have questions by using the chat. So basically, the pound is moving up again already. That's good. So it seems to be back at resistance. So this could be a hook back easily. But the pound is quite volatile in the morning. So in any case, any break I think is bearish. This itself could be bearish already. If it does break to the upside, I don't think it will go far. And I think a 61.8 hit, 78.6, any of these fibs could be resistance. All right, so Keltner, great for back to the average, mean reversals, setups, good for breakout understanding, maybe even trend definitions. What is the trend using the angle of the Keltner. Keltner is for free using MT4 Supreme Edition from Admiral Markets, special platform, almost I think 100 special features throughout the technology. So Keltner is one of them. And you can try that for free if you trade with Admiral Markets, or you can try that for a month. You can try this indicator called Admiral Keltner. So it's good for support resistance, and it's a good decision zone. It is a good bounce or break spot. Regarding the markets today, the recap is, well, we had a good continuation of the euro dollar up, good pound USD down, but now we're tracing dollar yen good down. And those are ideas we discussed yesterday. Now they're taking place. What is left today is A, looking for retracement and trying to catch the continuation, or B, looking at these daily candles sometimes and looking if there's a good breakout or not, and then trading them tomorrow. Your dollar would be not the daily, but the 4-hour chart candle. So what is left for today? Yesterday was the setup. Yesterday was the retracement and the continuation. Today we're seeing a follow through of that continuation. We can try to trade part of that continuation after shallow pullbacks on lower time frames and patterns. For more of that, ultimately looking at 4-hour or daily candles as confirmation is handy to see if there's momentum left for a continuation. In the case of the dollar yen, it would be the daily, and we're looking for basically a good daily candle to poke through the Keltner and the trend line as a basically confirmation. If it doesn't, then there's a bullish pin bar. It looks like a reversal. If there's a good breakout candle, it could easily be a continuation breakout for more downside after this trend line break. So these trades have happened. What is left basically are pullbacks later today for follow through or good breakout candles for later this week or next week as a continuation. That is regarding the euro yen, pound yen 2, basically roughly the same. Now, Aussie, Kiwi, I'm not a big fan of those personally, as I said, and Euro odd and pound odd, I had some trade ideas mentioned as well, as you know. Euro pound 2, and that's it at this point. Let's see. I'm not sure, maybe a pair like Euro CAD could have some trade ideas too, but maybe not at this moment. I don't know. I don't see it 1, 2, 3. I was not looking at the Euro CAD beforehand, but yeah, that's always potential. Of course, some other currency crosses. If you have any specific in mind, let me know. Ron is asking, how come the S&P 500 breaks record after record, but the whole economy stays behind? That's an excellent question. And I think it's a difficult one to answer. I mean, my humble opinion, my humble attempt in answering that would be that companies are doing very well. And it's maybe partly not only because of, let's say, consumer demand, but they're maybe doing acquisitions, maybe they're have lower costs in terms of imports, maybe labor is cheaper or relatively cheaper, maybe labor's higher production from their work. Maybe they are getting big companies are finding better tax advantages. I'm not sure how exactly they do it. Maybe they are leveraging by increasing their sizes. I'm not sure. I mean, definitely it is. It's, of course, there's a bit of discrepancy there, or there's a large discrepancy, perhaps some would say, and you can see that the difference. I mean, the economy is not tanking as the S&P is looking like, right? There's not. I would agree that it's not the same. Now, how much you agree, I guess, depends from person to person, and why that is. What the reason is for that cause. It would be interesting to talk to economists or I'm not 100% sure. I mean, these are just some things that I have in mind. that could explain it perhaps. But I think eventually you can't, get all. You cannot. Eventually, there's an end to efficiency, I would say, and I think that it's going to have to slow down to some degree. And you would think that eventually the performance of these companies would be more driven by the global economy or the general economy of the US and the global world. So I think that there's a max stretch one could push this, I would think. But those could be some factors, perhaps, that explain why the demand from consumers is maybe not the main reason for this push on the S&P. But then again, maybe there could be other reasons. For instance, if you're looking at it from an investor point of view, stocks give some dividends, right? There are low levels of returns in the market still, with interest rates very low. Typically, of course, when interest rates are low, stocks should do well. Why would you hold bonds that give you very low rates? Gold doesn't give you anything. They're all very defensive. So if you want to get something back, a bit of return on your money, then stocks is the place to be, generally speaking. So we've seen pretty big rises since the global financial crisis of 2008, 2009. And we're still seeing that continuation. So it could be, partly explained by that as well. Also, there is a bit of disconnect, because if the economy is not doing as well and the interest rate stays low, that's actually also, then again, good for stocks, because low interest rate means basically that there's more demand for stocks. If the interest rates go up, it's typically not good for stocks. So that's also another factor to keep in mind. Yeah, there's a lot of liquidity available indeed. But there's also these big multinationals. They have a lot of cash. They can do a lot of acquisitions, so they can grow in those ways as well. Plus the general environment of interest rates that are low. So as an investor, where would you want to park your money? Where do you want to try to get a bit of return? And stocks is one of those. All right, folks. So great question there. This is basically it for today. Tomorrow we're going to talk about Keltner again. We're going to take a look one more time at Keltner in the strategy session of tomorrow. Wednesday, Netta takes a look at supply and demand zones. Thursday, we have a webinar as well, new Heikin-Ashi trading systems. All right, so those are our webinars still this week. Tomorrow's strategy, supply and demand, Heikin-Ashi. Appreciate that you were here, and that's great. Thank you so much. Thank you also, Bernard, for your kind words there. And I hope to see you in the webinars this week. Cheers, everyone.